Years of work by Minnesota Realtors and our coalition partners culminated in the Minnesota legislature passing the first generation Community Homebuyers Down Payment Assistance Fund in 2023. And that's what's led us here today. In just a moment, I'm going to turn it over to trainers who will walk you through the details of this program, but I want to encourage you to not miss the significance of what we're doing here today. As realtors, a program like this, which will help thousands of first-generation homebuyers become homeowners, is just one way to showcase your value as a realtor. Without realtors, a program like this would not exist. This will meaningfully change people's lives, and you are a vital part of making that life change happen. So I want to thank you all for everything you do, for being here today to learn about this important program. And with that, I'd like to take a moment to introduce today's speakers and our experts. First, Henry Rucker, a lifelong resident of the Twin Cities, brings to Banneker Realty LLC a wealth of community knowledge and connections. With over 20 years of experience in the real estate and banking industry, Henry has done a vast amount of his work in urban communities and knows firsthand of the struggles and successes people in urban communities have. He works hard to give people the information they need to make informed decisions that will have an impact on their life by constantly asking himself, if I was the person on the other side of the table, what would I want to know? Henry found a renewed commitment to community after the birth of his daughter when he reflected on what the community afforded him through life, strong neighborhoods, family camaraderie, sense of community, activities for kids, and a place where families were accountable to each other. Henry is a graduate of Clark Atlanta University with a BA in business and a concentration in marketing, and is a life member of Kappa Alpha Psi fraternity, whose main mission is community service. And because of this, he's committed himself to serving his community. Brooke Walker is the Strategic Initiatives Director for the Minnesota Homeownership Center. Ms. Walker has more than 20 years of experience as a nonprofit leader working to further social, economic, and racial equity, rooted in the belief that solutions must be grounded in lived experience. In her role since 2019, she currently leads the center's work to advance Black homeownership through cross-sector collaboration focused on transforming the down payment ecosystem and the principles of homeownership. Brooke holds a master's in social work from the University of Minnesota and a bachelor's degree in social work from Augsburg College. She is a licensed independent social worker. Please join me in welcoming Henry and Brooke.
Thank you, Josh. I appreciate that introduction. Welcome, everyone. Glad to be here. We are going to start by first giving an opportunity for Karen Larson, the Vice President of Mortgage Lending from Midwest Minnesota Community Development Corporation, to introduce herself in the role that Midwest Minnesota CDC is playing in this new and exciting opportunity.
Thank you, Brooke. Hi, I'm Karen Larson, Vice President of Mortgage Lending at MMCDC. We provide commercial mortgage and consumer lending throughout Minnesota. State funds were appropriated for the First Generation Homebuyer Community Down Payment Assistance Fund, and MMCDC was appointed to administer, manage, and deploy the funds. We're working in partnership with the Homeownership Center, Minnesota Realtor Association, and other key partners to bring this new down payment assistance to Minnesota residents historically left out of homeownership. Thank you.
Good afternoon, everyone. Thank you, Josh, and thank you, Karen. Welcome, everybody. We're excited to start this training today and have you here to learn about this great opportunity. I'd like to cover today's agenda. First, we're going to start with the first generation borrower, what makes up that borrower, the borrower eligibility, the application of closing, the product terms, and resources. I would also like to say that typically at some of these trainings, we do allow a Q&A. There will be no Q&A today, but we do highly encourage you to put any questions that you have in the chat, so we can take those questions from the chat and then do a follow-up with maybe, some fact-finding facts for you and answer those questions for you at a later time. So please take the time to put any questions you may have in the chat, and we will follow up with that at a later date. So again, our key partners, we want to make sure that we are acknowledging our key partners in this. The administrator is Midwest Minnesota Community Development Corporation. We'd like to thank you. DPA lenders will be different CDFIs, local nonprofits, tribe or tribal governments, housing counseling agencies, first mortgage lenders, and real estate professionals. So you as well are going to be our key partners in this, and this is why we're having this training today.
Thanks, Henry. So just to start, I'd like to provide a little bit of context of how we arrived here. I would like to just officially acknowledge that the State Association was a huge partner and really core to the success of where we are today. So I appreciate that, and I appreciate the commitment of the association. So again, just to provide a little bit of context, in 2021, we established a cross-sector working group with the goal of better utilizing down payment assistance to close and narrow the racial homeownership gap. We also saw an opportunity to improve the delivery system and increase targeted funding. We knew that there was a role for the state to play, so in 2022, we did advance legislation, and we had some success, but no funding. And then in 2023, our efforts were successful, and $100 million was appropriated for this effort. So why first generation? As you know, in this industry, we have had down payment assistance in our market for many, many years. It definitely is a contributing factor as to why we have one of the highest homeownership rates in the country. But as Josh mentioned, we have some of the largest disparities. And more specifically, one of the disparities that I like to point out is that we have a 50 percentage point difference between Black and white homeownership. So we know that the approach that we've used with down payment assistance, which generally focuses on first-time home buyers and low to moderate income buyers, has not really helped us close the gap and has contributed to leaving many out of homeownership. So with the first generation, we're testing whether or not this targeted approach will act as a better proxy to reach those who have been left out of homeownership. And we are using this opportunity to pilot this and see if we can have a bigger impact and make a larger difference. Lori, can you take the spotlight off so that for the recording, we're following the speaker? Thank you so much. So just briefly, for some highlights, we'll delve into a little bit deeper today. So in terms of borrowers, at least one borrower must meet the definition of first generation. We are going to go over that a little bit more in depth later in the presentation. 10% of the purchase price is allowed, so up to $32,000. And so this means essentially if your buyer has a pre-approval for less than $320,000, they are not going to use the full possibility of this amount. So it's 10% of purchase price not to exceed $32,000. As I acknowledged, there was $100 million appropriated. We think that's going to equate to about 3,000 loans statewide. Much will depend on how much is used by each borrower. Again, this is a pilot, and we are testing the impact of using first generation as a proxy. The funds must be deployed within a 3-year time period once we start, but we do anticipate the funds will probably be available for about 2 years, give or take. And while we do not have a set launch date, we are committed to the funds being available at some point this spring, later this spring. So now we'll dive a little bit deeper into eligibility. So first generation it's a new concept in our industry. Some municipalities have been doing some programs over the last couple of years, but this is generally not a universal thing, and nor is there a universal definition. So some of you may have worked with other programs that use first generation. I just will say that it's important for you to be very familiar with what's accepted for this program. So essentially, at its baseline, the borrower and their parents or legal guardians have never owned a home in any country, or if they owned a home, they lost it due to foreclosure. For co-borrowers, they just have to meet the definition of first-time buyer. So as I mentioned before, at least one borrower has to meet the definition for first generation, but all other co-borrowers have to be at minimum first-time home buyers. And we are using the definition of no ownership interest in a principal resident during the last 3 years. And all borrowers will be required to sign an affidavit. And obviously, knowingly misrepresenting their eligibility is an act of fraud. So it's going to be very important that your buyers that you're supporting understand what it means to be a first generation buyer and are making sure that they're, really doing their due diligence to understand that and that they are attesting to that. So going just kind of one step deeper, we've gotten a lot of questions around this definition. And so just to be very clear, it really comes down to if the borrower, any of their parents or legal guardians owned a home at any time in their life, they are not a first generation buyer, regardless of whether or not the parent is living. So we've had a lot of questions of like, my mom owned a home, but my dad did not. If one parent owns a home, you are not a first generation buyer. My parents owned a home, but they're no longer living. Again, if at any time during their life they owned a home, you are not a first generation buyer. The other question that has come up a lot is what if one of the parents or legal guardians married someone who owned a home? So again, marrying someone who owns a home means that they have ownership interest, even if they're not listed on the mortgage. So if their parent or legal guardian married someone who owned a home, your buyer is not a first generation borrower. And again, the only exception is if they owned a home and it was lost due to foreclosure. And again, they have not owned a home since. So I think people are really trying to wrap their brain around this. I acknowledge that it's going to take some time, but it's going to be important to help your borrower understand if they truly are a first generation buyer. And I think people tend to lean into, did I actually benefit from that ownership rather than just the baseline definition of if there was ownership interest. So please keep that in mind and help your colleagues and your buyers understand this. So just to cover this, so again, at least one borrower has to be a first generation home buyer. That borrower, the first generation borrower, is the one who is required to complete homebuyer education. Obviously, we would love all borrowers to complete homebuyer education, and we believe that's in their best interest. But the minimum requirement is the first generation buyer has to complete the homebuyer education, and they also have to be a resident of Minnesota. That does not apply to co-borrowers. Co-borrowers have to be first-time buyers, but for the first-gen borrower, they have to be the one who completes education and are the resident of Minnesota.
Okay, so we know you guys, everybody has to take home buyer education. We want to make sure that we are stressing that to our participants, our clients, that early in the process, we would like to get them enrolled in home buyer education. So option one would be complete an instructor-led in-person or live virtual course using Homestretch, Realizing the American Dream, or Pathways Home. I like to really stress that if we can get people to take in-person classes, we believe that is the best option for all participants. We understand that everybody cannot make it in person, but we would suggest there's many different classes, workshops being offered every month through different organizations that are approved through the Minnesota Homeownership Center to teach Homestretch. We highly recommend we can get them in early if possible. Option two would be complete the self-guided online course framework, homeownership. Again, the sooner they can do that, the better. I do want to highlight, though, with certain people or organizations that take framework online, there might be an additional one-on-one session required. So just make sure you and your buyer are checking into that if they do framework online, there could be a requirement from the organization that they use their link for framework, but they are allowed to take framework online. Now, this is where I want everybody to really look at the screen and pay attention on this part. What's not accepted is the Fannie Mae Home View and Freddie Mac Credit Smart Home Buyer U. So I want to repeat that again. What's not accepted for first generation, I'm just going to repeat that. This is not accepted for first generation, is the Fannie Mae Home View and Freddie Mac Credit Smart Home Buyer U. So if you know you've already had somebody take that and they have not taken framework or Homestretch or Pathways Home or Realizing American Dream, we want to get them enrolled so they can take that and satisfy the requirement that is going to be needed.
So Henry, I'm just going to pop on here and say quickly that some of you might be wondering what realizing the American dream and pathways homes are. These are curriculums that were created by NeighborWorks America, and a couple of organizations in Greater Minnesota use this curriculum over Homestretch. So we listed them here because we want to make sure that you understand that they can be accepted. But if you're not familiar with them, it's just because they're used by just a handful of organizations in Greater Minnesota. And so while they are accepted, you're generally going to be working either with Homestretch or Framework Homeownership.
Thank you for that, Brooke. So again, this is important. So borrowers who complete homebuyer education after signing the purchase agreement are ineligible and may not apply. This is why on that previous slide, I was stressing that we want to make sure we're getting our buyers into the workshops now, if possible, because if they've not taken the workshop or did it online or did it in person and they sign a purchase agreement, they will be ineligible and they may not apply. Okay. Borrowers start shopping for a home after they are approved for funds. So again, I want to kind of put this in context. It would be nice if we can get everybody signed up in April and May and June and July and August to start taking Homestretch in person or any of the approved workshops in person or framework online. And then they want to get approved for funds. So borrowers start shopping for a home after they approve for the funds. We want to make sure that they're taking the proper steps because we don't want to have anybody sign a purchase agreement and then take one of the required workshops and find out later that they're not approved. So you guys, there's a lot of income limits out here in the different markets. So this is the eligibility, the borrower eligibility, right? I want to make sure we're paying attention to the screen right now. Lender qualifying income is used to determine eligibility. So again, this is what we're doing for first gen. The income that the lender is using would be the income used to qualify the borrower for eligibility. The borrower income meets the income guidelines for Minnesota Housing Startup Loan Program for 1 to 2 person, regardless of household size. So I'm going to say that again. Doesn't matter if it's a family of 4, doesn't matter if it's a family of 6. We're going to use the 1 to 2 person income guidelines that are part of the Minnesota Housing Startup Loan. Okay. So in the 11 county metro area, it's 124,200. Dodge and Olmsted counties, it's 118. All other counties, it's 111,700. So again, I want to just highlight on this. If they're a family of 4, we're still going to use the income of 124,200, 118, or 111,700, and that is based off of the Minnesota Housing Startup Loan for a 1 to 2 person household. Okay, so you want to make sure you're probably writing a note on that. Okay, we're going to continue down the borrower eligibility. Borrower must have an underwritten approval for a mortgage that meets the CFPB qualified mortgage definition. So borrower must have an underwritten approval, pre-approval, right? So they need to have made loan application and had their file approved by an underwriter to make sure that they're meeting the criteria, what the eligibility would be for them to apply for the funds. Non-occupant co-borrowers and co-signers are not allowed. Okay, so we know that does happen sometimes, but with first gen, you cannot have a non-occupant or co-signer approved with you. You would have to have them go back through underwriting and get approved just based on their own income and their eligibility. So I want to make sure that we're also understanding it's okay if they have a non-occupant co-borrower or a co-signer, but not if they're going to use first gen for down payment assistance. So I'm going to go over this again. I'm going to recap this with you guys, right? We want to make sure that we're hitting all the bullet points here. One borrower is a first-generation home buyer, a current resident of Minnesota, and completed education in the last 12 months. So we know that sometimes people took a class in 2021, 2022. That's great. They would need to retake that class again. Their certificate has to be issued within the last 12 months. So if they've taken it in the past, that's great. We want to make sure that they're coming back and doing it again, and the certificate is dated within the last 12 months. They also have to be a current resident of Minnesota, okay? Homebuyer education is an approved course and completed prior to signing a PA. So if we know you have buyers in your pipeline that might want to take advantage of first gen, we want to make sure that they are applying, they want to do Homestretch or frameworks or one of the approved workshops prior to signing a purchase agreement. Again, There's a lot of different workshops that are being offered on a monthly basis and a weekly basis. We want to make sure they're signing up for those. Combined borrower income meets the guidelines for Minnesota Housing Startup Loan Program for 1 to 2 person, regardless of household size. So maybe take a screenshot of this page. Again, doesn't matter if it's a family of 4, if it's a family of 1, we're only going to use the income guidelines for 1 to 2 people. Borrower has to have a underwritten pre-approval for a forced mortgage that meets the CFPB qualified mortgage definition. So again, check in with your lenders that you work with, or make sure the buyers are going through underwriting and having that underwritten pre-approval.
Great, thanks. So let's talk a little bit. So that's a little bit about borrower eligibility in terms of who can actually apply for the funds. So let's talk a little bit about the actual application for funds. So this is going to be a centralized application. This is a statewide program, really kind of first of its kind opportunity. And so the way that we are going to approach this is that there will be an application that borrowers will complete online. For those of you that do down payment assistance, you're probably used to going directly to a local nonprofit who offers the program, reaching out to them and seeing if there's funds available and a borrower applying. That will not be the approach this time around. Borrowers will go to a centralized one-stop shop to complete an application. And on this application, the borrower will confirm their eligibility. They'll provide some basic household information that is not contingent on their eligibility, but helps us tell the story and understand if this fund is actually reaching those who we intended to. They will also upload their home buyer education, and they will have to upload their underwritten pre-approval letter. And they will be served on a first come, first served basis. And so the application, again, everyone will apply there, and then they will be served in the order that the applications were received. So borrowers, again, are going to have to apply online. There will be no direct inquiries to the DPA lender. So it's just going to be really important to understand that. Obviously, we've gotten the question, what if my borrower has language barriers? What if they have technology barriers? And our assumption is that you, as their professional in support or the mortgage loan officer, will help them. So it isn't that you can't help them complete this application, but it's the understanding that they are the ones who are actually answering and responding to and submitting online. So what will happen is once they apply and their application has been screened and reviewed for basic eligibility, they will then be assigned to a DPA lender based on capacity and geography. We're going to be working with about 10 DPA lenders statewide. So again, these DPA lenders, as Henry mentioned in the beginning, are local nonprofits and CDFIs who will only be originating this DPA product. They will not have anything to do with the first mortgage that they've selected. They'll work in partnership with the first mortgage lender, but their role really is to originate this product, this community second. So a lot of questions have been, how many, how quickly, how fast are we going to move? So based on the capacity that's available, we plan to originate about 1,000 loans in the first 12 months. So we're going to be looking at doing and processing about 100 to 150 applications a month. And so it's important to understand we anticipate there is going to be a high demand to start. We do expect it to level out over time. But this program is really designed for people who, but not for these dollars, would be unlikely to purchase a home. So if you have buyers who are first gen and don't really need this money, it may not be in their best interest to apply and to wait to be approved. Again, this program is really designed for those who, but for not having these dollars, would be unlikely to be able to purchase a home. The program will have a fund reservation. And so once they apply and are assigned and approved, they will have the opportunity to reserve funds. So we think that this is a great component of the program. It guarantees that there's going to be funds for the borrower for at least 90 days. It increases confidence and buying power. It will help reduce the uncertainty, and it will help to streamline the closing process. So I'm going to spend a little time just really kind of recapping a little bit about what we've talked about and really kind of walk through what the application to closing process looks like. So I'm a borrower. I'm first generation. I am super excited. I didn't even know that anything like this existed. And, while I've got a few $1,000s in savings, there's no way that I could be competitive in this market without some significant down payment assistance. So I've completed homestretch, homebuyer education. I learned a ton. I did some shopping for what I think is the best mortgage loan officer for me to work with. And they've looked at all of my income and they've done my underwritten pre-approval. They've told me how much I can qualify for. They've looked at my credit, my debt, everything. So now I'm ready to go and I'm ready to apply online. So I complete my online application, fill out a few details about my household, affirm that I am in fact a first generation buyer, that I or my parents have never owned a home at any point in their life. Super excited, submit my information, upload my certificate, upload my underwritten pre-approval, and then there's going to be some time that passes on the back end. Once my application is screened, I'm going to be assigned to a DPA lender who's going to contact me directly. They are going to affirm my eligibility. Myself and my co-borrower, who's a first-time home buyer, are going to attest to that fact. We are going to also sign a release of information, and the DPA lender then will be in touch with my mortgage loan officer. Once I have verified all of those things and received my reservation letter, I'm going to contact my realtor and we are going to begin shopping. I will have 90 days to find a home, but if I need more time, there is the opportunity for me to request an extension for an additional 60 days. Once I have a signed purchase agreement, that information will be submitted to my DPA lender, who requires 35 days for closing. So you, as my realtor, when we're negotiating this agreement, are going to have to make sure that we have enough time built in for closing, because the DPA lender needs a minimum of 35 days after they receive the purchase agreement. Once everything has been reviewed and confirmed, the DPA lender is going to issue a commitment letter, which is valid for 60 days. And then the final step in this will be my loan closing. So I think the thing that's really important, the takeaways for you here, is that as your customers, the borrowers, need to complete homebuyer education and have an underwritten pre-approval before they apply. Once they apply, they essentially get in the queue, and on a first come, first served basis, those applications will be screened and assigned. Once I actually have affirmed and approved and have the go ahead and have my reservation letter, that is when you want to begin shopping with your borrower. There's nothing that says you're not allowed to apply if you have a purchase agreement, so long as education was done ahead of time. But the chances of your borrower actually being approved within that timeline and the required amount of time to be screened, validate, and attest to the eligibility and the 35 days required for closing, you are almost guaranteeing failure. So again, the messaging that you want to give to your buyers is to get prepared, complete education. As Henry said, there are lots of classes available, really weekly across the state. If the consumer is more comfortable doing the online class, framework is available to them. So they need to get the education and they need to start shopping for the mortgage that is right for them. And once they've completed those two steps and this program goes live sometime here in late spring, they will have the opportunity to apply, and then they will come back to you and start working with you to find the home that is right for them. A few other things just to highlight. Again, the fund reservation, once approved, is valid for 90 calendar days. The DPA lender may allow a 60-day calendar extension. In the beginning, this should be a non-issue. It will just require your buyer to reach out to the DPA lender to request it. However, once the funds expire, so if they don't request an extension or they've reached the full amount of time allotted, they are required to reapply. So there is some limits to this. The fund reservation is not indefinite, and buyers will have to find a home in that time frame. So once they have the purchase agreement, it does have to be signed. It's not enough for it to be submitted. It has to be fully executed. And then the DPA lender, once they receive that, purchase agreement, the clock starts ticking and they will need 35 days to go to closing. So the commitment letter is valid for 60 calendar days just because we know things happen, closing gets delayed, especially if you're going to be layering in other DPAs, it can be challenging. Less common, but if there is renovation or new construction, the commitment period does have longer windows. That information will be shared once we get closer to launch. And then also just to call out, if for some reason the mortgage lender rejects the contract or the borrower calls the inspection contingency, these borrowers would not be required to reapply. They would be reissued a new 90-day reservation. We do not want to put borrowers in the position where they have to purchase a home that maybe has uncovered some things that make this home no longer viable for them. So this is an exception. Again, if the mortgage lender rejects the contract or the borrower opts to call the inspection contingency, they don't have to get back in line. They actually would be reissued a reservation. So just quickly to recap. So again, I think we'll just say this a million more times before we wrap up today. Homebuyer education and underwritten pre-approval is required for them to apply. They will complete the online application, they will get in line in the queue, and then they will be assigned to a DPA lender. Once their eligibility is verified, they've completed the attestation that they are in fact first generation. The DPA lender has affirmed the underwritten pre-approval with the first mortgage lender. A 90-day reservation letter is then issued. The borrower then starts shopping for the home once they have the fund reservation. Again, if they need to, they can request a one-time 60-day extension. Once the purchase agreement is executed and submitted to the DPA lender, a commitment letter will be issued. And again, the DPA lender requires 35 calendar days to close. I know that there has been a shift in the market around expediting closings, but this is it. So if you don't allow this time, there's a chance that your buyer may not have a successful closing and may not be able to use these funds. So our hope is having the reservation letter in hand and the underwritten pre-approval will make your sellers feel very comfortable with this transaction and understand the need for the 35 days for closing. All right, Henry, back to you.
Thank you. Thank you. A lot of great information that was just shared there. So you guys, the use of funds. We have got the commitment letter and we are going to be out house shopping for our buyers. 10% of purchase price with a maximum of up to $32,000. So hypothetically, I'm writing an offer for $350,000. 10% would be $35,000. The max that buyer would get would be $32,000. So I want to just say that to you guys as agents and professionals in this business, because sometimes we get the 10% stuck in our head. It is 10% with a maximum of $32,000. So that's the max that buyer would be able to get. Down payment, the buyer settlement costs and principal buy down, that's what we can use the funds for. So we can use it for the down payment. We can use it for the buyer settlement costs and principal buy down. It can be layered with other DPA funds. I kind of want to highlight what Brooke said just a little bit ago about the 35 calendar days. Just understand, depending on the other program they may layer with, that could add days to that as well. Just want to throw that out there. If they layer these funds with a different down payment program, it could add an additional 5 days or 10 days per that other down payment provider. Another thing I really want to stress here is that you're getting 10% down, but if your buyer is going FHA, this cannot be used for the first 3.5% of what we can call the MRI, which is the minimum required investment. We cannot do that, right? So if you're buying that house for the $300,000 and you're getting the 10% down of $30,000, but the buyer's going FHA, they have to have their own 3.5% into the transaction of their own money or a source of funds via another down payment program that might meet the MRI requirement, okay? And it cannot also be used as, for the closing costs or like value gap. I'm sorry, seller closing costs are value gaps. I want to make sure that we are saying that correctly, right? So got a buyer buying a house, they're going conventional, this 10% down can be used for their initial investment into the property. If they're going FHA, it may not be used for the first 3.5% into the transaction if they're going FHA, and it cannot pay the seller's closing costs, and it cannot cover the value gap as well. Okay. Repayment of funds. The lovely part about this, again, about this $100 million down payment source of funds, it's secured at 0% interest. It's a loan, and it's forgiven over 5 years. So again, there's no monthly payment. It's 0% interest, and it's forgiven over 5 years. Okay, the 20% of that balance would be forgiven annually. Okay, there's no partial credit. You live in the house for 3 years, you would have 60% of that forgiven. Okay, that's how that would work. We want to make sure that we're telling that to our buyers as well, that it's forgiving over a 5-year period, and it's not forgiving after 2.5 years. It would be forgiven after 3 years for that full 60%. If it was just 2.5 years and they were to sell, they would be forgiven at the 40%. Okay. As I mentioned, there's no monthly payment on it. Okay. So balance is repayable if they're going to sell or one of these things happen, this is how the balance would be repayable. Converts to non-owner occupancy. Okay. So you bought it as an owner occupant. 4 years later, you now are no longer owner occupant, occupying the property. They would have the right to say, hey, you have to pay this money back. If the property is sold, okay, naturally, if you sell the property because it's going to be a lien against the property, they have to pay off the mortgage, the first mortgage, and this down payment money as well as a second mortgage. Ineligible refinance. So again, that's going to be determined at the time they go to refinance. What would allow them to maybe have the loan subordinated, or do they have to pay it back? That would happen at the time of refinance or foreclosure. Okay, so I want to go over these again. It converts to non-owner occupancy. Property is sold. Ineligible refinance or foreclosure. If none of that happens after 5 years, this loan would be forgiven.
So Henry, I'm just going to pop on quick because one of the questions we've gotten on other trainings that we've done quite a bit is what is an eligible refinance? And so I think the most common refinance that is going to be allowable that the second would be resubordinated is going to be the interest rate. So if for some reason we see a drop in interest rates in a couple of years and people are locked in at a higher rate, and this would be to their advantage, there would be no cash out, but we would not make them stay in the higher interest rate. They would have the opportunity to refi for a lower interest rate.
Eligible properties. Owner-occupied principal residence only. 1 to 2 units detached in townhomes, condominiums, co-ops, and manufactured homes titled as real property. Shared equity, community land trust, and other resale restrictions allowed. Limited to properties in Minnesota. You must occupy the home within 60 days of closing. But I want to go back to bullet point 2. 1 to 2 units detached in townhomes, condominiums, co-ops, and manufactured homes titled as real property. So right now, triplexes would be a no, fourplexes would be a no. It's 1 to 2 units to use this money, this program. It needs to be 1 to 2 units. That's why I say it's going to be very important that we understand the different programs and how they work. But just for first gen, it's 1 to 2 units. And as on the previous slide, it's 10% of the sales price with a maximum of $32,000. And the buyer must move in within 60 days of closing. First mortgage, right? We all have our favorite lenders. We all have our favorite loan officers we like to work with. That's okay. Paired with any first mortgage that has a fixed rate and is fully amortized and meets the CFPB qualified mortgage definition. So again, I want to go back to fixed rate, right? We want to make sure that if your buyer is working with a lender already, that they understand that it needs to be a fixed rate mortgage, okay? This does include Sharia compliant and I-10 individual taxpayer identification number products, okay? So this can be used with Sharia compliant financing and I-10 loans. That's okay. Not allowed would be adjustable rate mortgages, ARMs, or negative amortization, balloons, and interest only. So if we're working with a traditional financing right now on a fixed rate mortgage, It can be Sharia compliant. You could also have an I-10 program. That would be perfect. The ones that are not eligible would be adjustable rate mortgages, ARMs, negative amortization, balloons, and interest only. You guys, we got a great opportunity here. As we talked about in the very beginning, thanks to Josh, we know Minnesota has a large disparity gap, right, when it comes to home ownership with households of color. As Brooke also mentioned, this is really going after the buyer that may not traditionally be able to qualify for a home. We're looking to get them into this, into a house. It's the first of its kind, right? It's a statewide program. So I want to say that again. It's a statewide program. This is not for the 11 county metro area. This is a statewide program. And I believe, as somebody that's been in this business for a long time, this is a very streamlined approach, right? Again, I'm going to harp on this again. Get our buyers into education now, right? And then make sure they're meeting with a lender to get that underwritten pre-qualification, right? Upfront preparation, that's all. I mean, the more we can have our buyers do upfront, the better it's going to be for all of us. I think it'll be a little bit less confusion for the buyers and us as real estate professionals. And the buyer actually will be more competitive, because now they're putting 10% down. I mean, if we structure the transactions correctly, they're actually going to be putting 10% down. And I think that's a way you can get your offer accepted with sellers. It's available for probably the next 2+ years. You know, the idea, maybe it goes 3 years, but it's definitely going to be available for the 2+ years, with the idea we're all hoping that it can last 3 years. But again, I want to go back. This is a very unique opportunity for us to put people into homes that traditionally may not qualify. And the lovely part about this, you guys, it's statewide and it's forgiven over 5 years.
Thanks, Henry. And I just want to add to that. I'm sure that, you know, as Henry said, we are taking a streamlined approach, but it is different. It's different in terms of how often down payment assistance has operated. The fact that we're using lender qualified income is, I think, going to make this much more streamlined. The fact that we're reserving funds and borrowers essentially will have a guarantee of funds when they're out shopping, I think is going to make this program great. I think people are going to maybe be frustrated with the having to wait, the first come, first served. But again, this is really for those who, but not for these dollars, would not be able to purchase a home. I think there is tons of opportunity here. It's going to be really important that people understand the first generation. And I think, unfortunately, a lot of misinformation is already spreading. And there's a lot of confusion, again, because this is new and we're doing things differently. So I'm going to take a few minutes to kind of go into and review what we are naming as the source of information. So one of the things that we're going to ask you to do is, when you go back to your colleagues, and people are interested in learning more about this information and what you heard, encourage them to go to the website. This training will be posted both on the association site. It will also be posted on this firstgendpa.org site. Usually what happens is someone thinks they know something and they're sharing incorrect information. So I just would say, use this site for yourself, encourage your peers to use this site. And this site is also designed for your buyers. So the homepage, and I'll just kind of high level walk through, essentially just calls out that this is coming in late spring. Once the application is live and people are actually able to apply online, they will find a button here at this site. So again, firstgendpa.org is the site that buyers are going to go to apply for funds. This is going to continue to evolve over time as we get closer to launch, once we have launched, but there's a lot of great information on here that's pretty easy for buyers to understand, right? So do I qualify? More on qualifying. So a lot of the stuff that we talked about today in terms of what does it really mean to be a first generation buyer, a little information on co-borrowers, income limits. Again, a lot of what we covered here today is available in an easy, simple, plain language way for potential buyers to take a look at. How does it work? How much assistance, and how do I apply? And then again, what do I need to do before I apply? So again, education and meeting with picking your loan officer and having them do the full pre-approval. We also have a page that's dedicated just to professionals. So for you as realtors, there is information here on this page. We have the training that we did with mortgage lenders posted here. Again, this training will be posted here. So if you want to go back and watch it, if you have peers and colleagues that weren't able to attend today, encouraging them to watch that. We also have the product terms listed here. So everything that we talked about today is here at a glance. The amount of assistance, the eligibility for borrowers, what homebuyer education is accepted, how the funds can be used, the terms for repayment, eligible properties, first mortgages, the details on fund reservation, commitment, qualifying ratios, and so on. So you'll see that all of the information that we talked about today is listed here, plus some nuanced details. We also have a comparison to Minnesota Housing's first gen homebuyer loan program. So it's important to understand that these are two separate programs. This is the first generation community fund, and Minnesota Housing has their own first generation program. They were appropriated $50 million. They are doing some info sessions. They will be having some trainings coming, and they also too have their own homepage. But just to make it simple for you, we highlighted some of the main kind of things that are similar and things that are different. So you can take a look at that on this website. And again, I would encourage you to visit Minnesota Housing's webpage to learn more about their product and training and information that they are sharing. And then once available, the forms and resources will be available here. So the mortgage note, things that first mortgage providers will need, other resources prior to launch will be included on this page. So now you don't have to go and check this page every day to see if we've made changes. At the bottom here, we do have the opportunity for you to receive updates by signing up here. So go to the industry page, go to the bottom of that page, include your email, and then anytime we do a major update to the information, you will receive a notification to come and again, check out this page. So I think with that, we have covered kind of the content that we plan to share today. Again, I would just say this is a new program. This is a new opportunity. We're very excited, but it's going to require partnership across the board with the lending partners to the realtor partners. Everyone's just going to have to play their part. And I would say that kind of the first thing is helping people understand if they are a first generation home buyer. There's a lot of confusion about that. We want everyone to be set up for success. We want people to understand. So helping people understand if they are a first generation home buyer, and then understanding the process. Again, completing education, getting that underwritten pre-approval, applying for the funds, and then once they're approved and have their reservation, begin their journey to find the home that's right for them. So Henry, anything else that you want to call out to the audience before we wrap up?
No, I just want to say thank you guys for taking time out of your day, your busy schedules to attend. We appreciate that. If I can, one thing I would stress, get them enrolled early in home stretch and make sure, we will follow up with the questions that I see in the chat, some answers for you, but please just, get your buyers enrolled early and educate them and educate yourself. And we appreciate you attending.
Yeah, thank you so much.